Very good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My apologies for that delay. I was just trying to get my internet issue sorted, but we are now ready to begin. Okay, I hope you guys are having an amazing morning today. Today is the 29th of November, 2023. Maybe just to start it off, I'm sure most of you have heard about the sad passing of one of the big investing greats. He goes by the name Charlie Munger. Okay, Charlie Munger is one of the people. He was a very close accomplice with Warren Buffett, and they are the ones that actually began or were able to scale and grow Berkshire Hathaway, which started off as a textile company, but grew to become one of the biggest investment companies that the world has ever known. So he just passed on yesterday at the age of 99 years. And of course, I'm sure Warren Buffett must be feeling very sad about that. So this gentleman here, he wrote a lot of books, and a lot of traders, and of course, a lot of investors really looked up to this person. And I'm sure you'll be able to get most of that information online and get to know more about him. If you didn't, or if you haven't come across any of his content or any of his books, I would encourage you to check out most of what he's been able to put out there. He's been able to put out there a lot of really valuable content on investing, on life, on psychology, and several of these things that are very, very important, especially for us that are in the investing, world. Okay, so I think just to start it off, yesterday we had some Fed speakers. I think there are about 3 Fed speakers. And the Fed speakers that we had, one of them was Fed Waller. And then, of course, the other one we had was Fed's Bauman. So they made a few remarks. And of course, the major or important remarks which I was able to get from their communication from Bauman, he indicated, whether from Waller indicated that it's likely that they won't keep rates high for too long, and the market actually reacted quite positively to that. We saw the indices skyrocketing from that, but also most of you also able to see how gold has been fairly trading. Gold has been fairly trading higher simply because of that possibility that we are going to have, the rates in the US starting to come down. However, what I can draw from this is that there are still sort of like mixed comments from the Fed. They haven't really yet provided us solid guidance of where they're likely to go with their rate path. And of course, we just have to keep waiting, most especially for 13th of December, when we are going to have Powell speaking. So many of the comments were hinting on inflation still being relatively high. And of course, inflation right now in the US, much as it's declined quite significantly, it's still very far from the Fed's longer-term target of 2%. A lot of them are also been hinting on possible economic slowdown. I'm sure you've been seeing how a lot of the data that has been coming out, especially for CPI, has been really pointing towards, lower consumer spending. And of course, today's GDP number that we are going to have will really give us guidance of whether the US is possibly moving closer to a slowdown. So, of course, we are going into December, and we're just left with a few days to close the month, and of course, to go into the last month of the year. So, a lot is likely to happen in the market. So, we are going to see a lot of movements, and of course, we need to prepare ourselves for what's likely to come, and get ready for surprises. So, before we go into the calendar, I just want to mention a bit about gold. If you recall, from the last time we had the snapshot, I indicated to you how the settlement prices for a lot of the gold futures, especially for those that are expiring next year, most of them are having their settlement prices above 2,000. So you notice that the spot price for gold has been trending quite strongly to the upside, and I'm thinking the reason for that could be because of that contango effect, something which I actually got to learn just recently. Well, of course, it's actually a term that we call contango, where future prices normally point to some kind of movement in the spot price. So let's quickly go to the calendar and see what you can expect to have. So when you go to the economic calendar for today, we have quite a number of events that have taken place. We have the RBNZ, which is the interest rate decision for the New Zealand. They also released a policy statement. So if we are to quickly just check through the policy statement, we'll be able to get guidance on what the Reserve Bank of New Zealand is pointing at doing. So the general trend as it loads, my apologies, the internet is a bit slow. So if it takes a little longer to load, don't mind that. Okay, so let's just go back to the calendar as those two tabs load. So for the calendar today, I think the major events we have coming in later in the day. One of them is the German CPI, which we're expecting to be released. We're expecting to be released about 47 minutes from now. We have also the German import price data. In addition to that, we're also getting some CPI numbers coming in from Bavaria, and of course also from the Brandenburg CPI. So as we continue later into the trading day, we have the GDP. So the GDP which is coming out. Okay. Kindly confirm that you're able to see the live. I seem to. All right. Okay. I think the internet is now stable. All right. So let's look at the calendar. So today we have the GDP. So the GDP, I think today is the most important event that as traders we need to prepare for, simply because any movement we get today, and of course, what's really going to move the market going into Thursday is going to be this event, which of course is going to guide us to give us a status of the US economy as of last quarter, and really tell us what policymakers could possibly take. So if we get a lower GDP number, I'm expecting that the dollar could, sell a little bit more today, and we could get some more risk on sentiment pushing a lot of the assets higher. Generally, the trend, I think, has been risk on. We've been seeing a lot of rallying coming in for the risk on assets like gold. Of course, gold has switched sides. Before it was a safe haven, especially since we were in the heat of the war between Israel and Hamas. But now that the war has come to some kind of a pause, it's now a risk on asset, and you're seeing that it's now buying along with the other assets. So the US, I think I would say, has not been in a recession for the entire year. We've been having GDP numbers coming in quite strongly to the upside. And the most recent data, which we got on the 26th of October, pointed towards an even stronger GDP number, where we saw GDP coming in at 4.9%, higher than the previous of 2.1%. So I'm expecting, if this continues, then we should see some strengthening for the dollar, possibly also some much more strengthening for the indices. most especially the Dow. Okay. Now, some of the Fed speakers, especially yesterday, indicated that the US is going to face some kind of a slowdown. And now something that they have been avoiding to say, that they are now starting to say, is that the US, of course, before we get inflation properly anchored below 2% or at 2%, that there has to be some kind of a recession. So there has to be something to pay for that. And there's going to be a recession. But the recession, of course, when it starts now is when we are not so sure. But of course, the other thing is that if we continue to get very strong GDP numbers and fairly strong, labor statistics, like the NFP data, and of course, some of the data that we'll also be getting from CPI, it will also then show us that, there's some kind of strength. Yeah. And of course, that phenomenon is something we call the Goldilocks. So Goldilocks is where even when you have lower CPI, but strong GDP, you cannot then confirm that the economy is weak. So that's what we are seeing, I think, with what's happening in the US. So that's really going to be the major statistic for today. The other one that we're also going to have before that is the Euro CPI, which of course, as you can see, is also coming out, I think, about 30 minutes before. And we're expecting that the CPI for the Euros or for Germany is going to decline. Should we get some decline there, we are going to see some selling coming in for the Euro and also possibly for some of the other assets as well. So that's pretty much it. I think maybe one of the other news events that will be important for today are for those who are trading oil. So if you're trading oil, you might want to focus on the crude oil inventories data that we're expected to receive sometime at 6:30, okay, 6:30 East Africa time. There have been a lot of indications that the US has been building up on its oil reserves, and they did that in light of the recent decline of the recent rise in the oil prices. So if you recall last year when there was a Russia-Ukraine war, the US was faced with very high oil prices and of course even very high fuel prices. So they had to drain their reserve. And ever since that time, and of course even going into this year, the reserves were still relatively low. So they have been ramping up those reserves. And I'm thinking that could also be one of the reasons why we are seeing oil prices significantly dropping. Now, the other forward-looking indicator for a recession is normally lower oil prices. If you recall, during COVID, futures prices for oil and also spot prices had declined quite strongly, and some of the futures prices even went into negative territory, if you remember. So part of the reason for that is normally that it's a forward guidance to a recession, but we can't conclude on that yet. We just have to wait and wait for more data as it comes in. So let's just quickly go to the charts and see, what's happening on the charts. We'll start with Euro USD. Just a moment. Okay, so for Euro USD, there's a lot that has been happening on this pair. As you can observe here, we are in a very strong uptrend with higher lows and higher highs. And before we got the price action that we got to where Euro USD is now, we had a very nice bullish flag that was formed quite nicely. And you can see that price actually broke above it and continued trending higher. I'm expecting that one of the major catalysts for any movement today for Euro USD is going to be the GDP data. If we get weak GDP data from the US, I'm thinking Euro USD is going to skyrocket and possibly even go much, much closer to where it was sometime, at the middle of the year, towards July. So we are seeing that we're in a downtrend that has now switched to an uptrend quite clearly, as you can see. And we are now poised to close the year much, much higher for Euro USD. So for today's trading, you might want to observe how it, reacts at these levels here. We've been having a lot of liquidity sweeps to the upside, and I'm thinking this is a very strong indication of a much higher move. The other thing that I also need to mention is knowing that we have GDP today, it's really going to give us a nice move for the Euro USD lower. But the other thing that we are yet to see for a change of trend, or I would say a temporary change of trend, is that we need to see maybe a bit of some lower highs forming here that we have not yet seen. We also need to see some kind of like a head and shoulder, which we have not yet seen. If we do not get those patterns that are showing us a change of trend, then we can conclude that, it's likely that we are going to see, much higher values for the euro. So as you can see, the pattern we've been having, broke above this level, ranged a little, ranged around this level. But again, even the price action here was quite clear that it was actually having a nice trend higher. Okay. So should we continue to get more sweeps to the upside, possibly also, higher highs, then we are going to see the euro trending higher. But I'm thinking there's going to be at least one catalyst that is going to pause the rally. If you see how the euro has moved from where it was at this point here, which was sometime towards the end of September, the euro is up whooping 600 pips, a move of over 6%. So we need to at least pause a bit on this rally. And of course, the main catalyst for that pause is going to be today's GDP. But I'm thinking also 13th of December, when we have the next Fed conference, will then give us some strong guidance of what happens next for this pair. But for intraday trading, you might want to have a buy bias on it, possibly upwards to 1.10 or $1, rather $1.10. So crossing over to gold. So for gold, I'm just really focusing on looking at it on the weekly to see how it's evolving, simply because lower time frames cannot really guide you on what gold is going to do next. Some traders have called these the three musketeers. So when you see how gold is looking like on the higher time frame, it has triple tops. It has a triple top. Triple top here, we are seeing this level here that was during COVID, the highest point was 2073. Then we had Russia-Ukraine, 2068. Now, when you come this side here, you have, what is here? This is 2080. So each of these peaks on gold have a fundamental effect behind them. The first one here was COVID. This one here was Russia-Ukraine. This one here was SVB. If you recall, in March, around March this year, there were some banks in the US that collapsed. And of course, the one that sparked that sharp move on gold was the SVB, which is in full, that is Silicon Valley. So now, where you see gold now, you cannot link this move higher to any of these previous moves. These previous moves were all geopolitical related moves. Aside from maybe, of course, only one of them was a geopolitical tension, which was the Russia-Ukraine war. The other one was the COVID pandemic. And of course, the one after that was the SVB crisis. So now what we have here on gold is a possibly new bull run that is going to take gold to uncharted territories. Okay. The only issue though is that, does that happen this year? Unlikely to. Maybe it starts happening next year. And I'm thinking gold might have peaked. I don't know whether this level is the peak for gold or the lower high for it for the year. It could attempt maybe a retest of 2050, possibly upwards to 2080. So the upside potential for gold is anywhere from where it's trading now and where this peak is, a move which should give it about 2% gain. So unless we have a move to that level, I'm thinking gold, unless we achieve this level here and break above it, might not be the right time to sell gold, simply because it still has, upside potential. And of course, for intraday trading, you might want to look to just do some scalps by using some patterns here and there, so that you do not get stuck in any kind of price action. Now, today we have the GDP, and if we get very strong GDP, gold is going to start its downtrend, and it could possibly make some kind of a higher low here, possibly maybe somewhere around here. If we get a completion of this pattern here, then gold now will start its downtrend. But we cannot sell from here because it has to attempt to make another high. Okay. If you see what gold did even in the previous years, before it started its downtrend, it had two peaks. So the first peak most probably will be something like this, which we now have made. Okay. Now the second peak has to be a reattempt of this high, which we have not yet seen. So until we see that, it would be very, very unlikely that gold, just has a complete downtrend all the way here. Most likely not. Okay. Okay. So let's cross over to GBPUSD. So for GBPUSD, same thing also. It's in a very strong uptrend. We had a downtrend up until end of September. We were range bound for almost a month, and now we are now on an uptrend. So if you go on if you just zoom in on your H1 time frame, you have something like this. So you can see that GBPUSD's price action is sticky upwards. This spike which you got yesterday, I don't know how I forgot to mention this, but the previous bond auctions we have been getting for the US, there has been some kind of a pattern that I've been seeing there. The bids to cover. So bids are those that have made proposals to actually buy the bonds. That bid to cover ratio has been declining for most of the assets. So if you look at the 2-year auction, you look at the 30-year, 20-year, there seems to be a pattern whereby fewer people are getting hold of the US treasuries. I don't know whether it could be that they're fearing that the US is in some kind of a debt crisis, which of course it is, but whether that points towards a possible weaker dollar is something that we are yet to see. But if there's anything to give any kind of I would say any kind of support to this upside move for the pound dollar, it's those auctions. Okay, so I'm thinking the pound is going to possibly continue to move higher. We should see it moving upwards to 1.29. Now, the other thing that I also need to mention is economically, generally, there are not so many complaints, I think, coming in for Great Britain. Rishi Sunak recently, I think, during the Global Investment Summit, I think on Monday, indicated that, he managed to cut inflation in half. And of course, the other thing is that he's also looking at tax cuts. So I'm thinking that should benefit the pound and also, give more support to its currency, rather the Great Britain's currency. So we should see a much, much higher move, but we are going to see some kind of a pullback. We should wait for today's GDP data. If we get any kind of weak GDP today, then we should see some kind of a downtrend here, possibly taking us back to this level here. So I'm thinking this move that we had from yesterday's spike, that was during the 2-year auction, where we saw the bid to cover ratio declined from the previous auction, but also the auction yield was also much lower. That of course did not support a stronger dollar. But of course, this move needs to be corrected, and we should potentially see pound dollar moving back here. If we also get weaker GDP data coming in from the US, then I'm also thinking you should also should support the pound to potentially break this level and move higher. And of course, if the markets don't price in the GDP and ignore it, then regardless of the GDP data we get, we should see a weaker pound. So I just want to mention that again. So sometimes data comes out and the market does not react as you would expect. And of course, I would hope that by this time you're aware of that, and it's not a surprise to you as a trader, because not all the time economic data will impact the market the way you would want it to. So you need to be ready for surprises. So if we get even a weaker GDP, rather stronger GDP, rather a weaker GDP for the US, that might not really point to a weaker pound. Okay, even when it should, you need to monitor your price action, see what the market is doing, and then now use that to now decide and say, I'm going to take a trade, based on that premise. Okay. Let's quickly cross over to the indices. So I'm going to start with NASDAQ. So NASDAQ right now, there is a very nice big ascending triangle that it's printing, and you can actually see it quite clearly here. It might be better then for me to actually remove this. I'm just going to remove some of these lines. I don't know whether you can view it. So let me not remove my lines. I need to keep my lines there. I'm just showing you now with what we're having with NASDAQ. So for NASDAQ, we have a lot of liquidity sweeps. You can see a lot of them are actually pointing to a move higher. We have them here. We're also having a number of them here, So most of those sweeps really are pointing towards a potential move higher. So right now you can see that NASDAQ has consecutively, I think 1, 2, 3, 4 times failed to break this level to move much higher to where we had this last sweep here. But we're going to get that break. If we do not get that break happening today, we are most probably going to get it happening later in the week. But I'm expecting we're going to have a break taking us higher. So if we do not manage to break this level here, in some kind of a fashion like this, if we don't get something like this happening, then what we are going to do is we should then see NASDAQ breaking this level and starting a pullback into mid-December. So yes, the Christmas rally is likely to happen for the indices, but it's not going to happen immediately. Christmas is not until, I would say, how many weeks from now? There's still quite a number of weeks before we have Christmas. And of course, that Santa Claus rally does not happen until, towards the end of December. So we might have one more sell for the indices that's going to create some kind of a lower high, which I'm thinking should be somewhere around here. So we should have something like this. Okay. It might not be this steep. I think this is a bit too steep. Maybe something like this. Okay. We'll break below here. We have a bit of a pullback, maybe back to this level, closer to the mid level of 15,000, maybe around 15,500, 15,400. And then now we push higher for the year. Okay. So that's what I'm expecting is likely to happen on a NASDAQ. And should we see this happening, this should happen sometime in mid-December, possibly on the day when we have Powell speaking. Okay, so let's go to the Dow. So for the Dow, we are getting the same price action as on a NASDAQ. Very nice setup for a buy here. As you can see, we have a very nice ascending triangle, and we are expecting it to break higher. So Dow's trend is a no-brainer. You can see it's in a very strong uptrend, and we're expecting that should we get strong GDP of NASDAQ and Dow, the one that will react more strongly to a positive GDP is going to be the Dow, taking into account that the Dow has a lot of sectors that contribute to GDP, and of course, having strong GDP would mean that investors might want to point to or rather get into buying some of these stocks. So same thing for the as NASDAQ, strong uptrend. We are looking for buys when we have a test of this level here, just like we had here. Same thing that we're also seeing here. This index is showing us very strong upside momentum. Okay. So for us to get a change in trends, we need to get at least 2 peak points, which will be in a form of lower highs. Okay. So we have a peak point, so possibly upwards to 35,600 peak point, and then lower high, and then a move lower to reverse this trend that we are seeing. So unless we get that, I think Dow is poised to move much higher. So if we go on the higher time frames, we might maybe want to do this. Just a moment. If you go on the higher time frame, most especially on the weekly, you notice that the Dow is not too far from the all-time high. So we are looking at a move from current levels of about 4%. Okay, 4% should take us to all-time high. That's not too hard for the Dow to do. And of course, I'm thinking that ever since we broke this descending wedge, which we saw on the weekly, so you can see that descending wedge is very clear here. Break of this level here. We had a retest at this level, but you can see that the Dow is actually in some kind of an uptrend. And of course, even the low that we had from the Israel-Hamas was a higher low. Okay, so the fact that we did not break this level here meant that the market, the liquidity has been fairly priced there, and we should see, much higher levels for the Dow. But again, just like I've mentioned for the NASDAQ, expect that there's going to be some kind of a pullback, possibly within December. Yeah. But for trading today, look for trades, at the retest of that ascending trend line, and these trades should ideally be potential buys, looking, much, looking for, take profits above this level here. So I think that's it. I will maybe just look in the chat section. If you have any questions, I'll be happy to take them. Okay, so let's look through the questions here, see what questions we have. Okay, so let's see. Yes, hi Jess Squad, I hope you're doing great. Hi Matilda, hi Brian, good morning, hope you're doing awesome. Jess Squad, you're saying two things happened yesterday. Two Fed hawks gave dovish commentaries, Governor Waller and Governor Bowman. Was this the main market mover, or the other is the US home price index was at a record high? Yeah, so I'm thinking the move that we saw yesterday had two contributions. One was the 2-year auction, for the 2-year note auction, where we saw that there is a trend of decline on the yields. So we saw the same thing happening for the US 30-year, the US 20-year, even the 2-year note, and that of course is pointing towards some kind of decline in interest for the bonds. And of course, what that means for equities is that whenever we have that happening, it means that there's more money that's going over to equities than to the bonds. The other one could also point towards some kind of fear from investors that, given the fact that the Fed could be considering, starting their rate cuts, they might not really get a lot of, interest on their treasury. So that's the other thing, and I think most especially that spike which you saw on the indices yesterday. Even also for the pound dollar. If you look at pound dollar and euro USD, you'll notice that there were some big spikes around. I think it was it around 7:30? Yes, yeah. Those spikes was because of those auctions. Then now the other one is there were some comments that we got from there was one particular Fed hawk who spoke, and he's called Fed Waller. So Fed Waller actually made some good comments that actually supported an upside for the indices, and the comments were in line with. He mentioned, these were his words. He said, "If inflation consistently declines, there's no reason to insist that rates remain really high." So what that means is that he's not really telling you that they are going to cut, but what he's really saying is that they do not want to keep rates too high for too long, right? And of course, if you don't want to keep rates high for too long, it just simply means that you want to cut those rates. So the markets now took that as a sign that, that the Fed could, look into cutting rates. So that's what that meant. Yeah, then of course the other comments were regarding GDP. One of them was Fed Waller said, "I see fourth quarter GDP at perhaps 1% to 2%. Last couple of weeks of data makes Q3 appear as a one-off jump in growth." Yeah, so of course here there are no indications that we're expecting to see lower GDP or even negative GDP. However, he also hinted on slowing of the economy. So I would say most of the comments you've been getting, Just Squad, have been really vague comments. So they don't really want to give you an indication of what they want to do next with policy. So it's really just to give you two sides of the picture. What could possibly happen if they consider this and that, So it would be too early to tell what the Fed is up to. We might want to wait maybe for 13th of December, and we wait for when they are going to have their meetings. And then, of course, we'll wait for what Powell says in the conference. So just what you're saying, mortgage rates above 7% have chilled out the housing market. Yeah, mortgage rates, of course, are high. And of course, the reason for that, as you can see right now in the US, it's really high interest rates across the board. Credit card debt has also been on the rise. Delinquency rates also are quite high also in the US. And most of that is because of the kind of interest rate regime that's we have been seeing. Yeah. So if you do not get fixed rates on your mortgage, then definitely you're having to suffer with those high rates. Let's see. So how does the new tax being superimposed on a forex brokers by Treasury affect me, a small fish? No, guys, you don't have to worry about that. I read through that article yesterday, but I was looking for the tax, the percent that they're going to be taxing, but I was not seeing it anywhere. Yeah, but I'm thinking, fortunately for Kenya, they are what I've been following with the government over there is that they're looking for all ways on how to tax. Could be maybe they are struggling to find resources, to mobilize resources, within the country. So they are now turning over to the taxpayers to see how they can get money from taxpayers. But I think that they are over milking their cow. And I don't know whether it's, how most of you guys are going to take it, for those of you that are over in Kenya. But hopefully they don't continue to do that, because it won't be so good. Yeah. Apple, you're saying if US GDP improves, will this cause DXY to strengthen? If US GDP improves, will this cause DXY to strengthen? If the projections are that interest rates will be cut, H2 of 2024. Yes. The earliest I think we're expecting them to start cutting rates is in the second half of next year. So sometime after June is when we can expect the first rate cut. But I'm thinking, of course, GDP might not really link over to the DXY, simply because there are a lot of things that are affecting DXY. One of them being, the kind of the auction rates that we have been getting over in the US. The bid cover ratios have also been declining, showing us, that there's not that much interest for treasuries. So even then, just with that, that's enough to give the dollar weakness. Yes, we could get some movement on. We could get some movement on the dollar from GDP, but it will be really hard to tell. And of course, the other thing is that, like I've said, you wouldn't really want to link what GDP comes out with your trading. Focus on the technical analysis, because at the end of the day, if GDP comes out and the market does not react to it, or if, say, maybe GDP comes in higher, but you see the pound dollar buying, you might get confused and then start to wonder what's really happening. Yeah, so it might be better to look at the data, yes, but focus more on what's really happening, or, with your technical analysis. Mario, you're saying in fundamental analysis, what's the correlation between inflation and rates? Okay, so inflation and rates, I would say I wouldn't say there's really that much of especially if you're using that to trade, you would use that separately. Okay, so with CPI, whenever we have a lower CPI, we should be then selling that particular currency, because lower inflation is lower currency. Now for rates, it's usually if you have a higher rates, that's normally bullish for the currency, and of course lower rates is bearish for the currency. But that's just generally speaking, okay? Because now you need to look at the context now with what's happening now, how are traders looking at inflation. Inflation now traders are now fully pricing in lower inflation for most of the currencies. So which means even when inflation comes in slightly higher, rather slightly lower, the currencies will still buy, okay? So I wouldn't want you to now say that when inflation is high currency. No, because the market will not do that. You need to look at what's really happening right now, and how is that now affecting the currency. So Apple, you're saying you sounded more bullish on stocks today. However, Warren Buffett in Berkshire showed that the accumulated over 157 in cash equivalents means he feels froth in the market. Yeah, but yes, actually, Warren Buffett has had a history of in always being whenever for us we are fearful, for him is when he wants to take risks. So he might be maybe increasing his cash level simply because he's waiting for opportunities where the market might present a pullback for him now to get a discount. So it could be that. I don't think it would really point that maybe there's some kind of a big event coming in for the indices, maybe like if you have something like a credit event, or maybe like a recession. I don't think. But what I can say is that usually stock markets tend to relatively stay higher. You'll always have the pullbacks here and there, but most times they'll usually stay higher. Yeah. So that's what I can say, Apollo, with that. All right, guys. I think that's it. We've had a great session, and I wish you all an amazing trading day. Let's meet again next Wednesday for the snapshot. And of course, for those who are joining in Kampala, don't forget that we have virtual classes in the morning at about 11. Make sure that you join in on those classes. Okay, cheers, guys, and have an amazing day. Till we meet. These guys have